watch the video. So once again, good evening everyone, or good afternoon wherever you're calling in from. So we're going to be starting out today looking at the different charts, different pairs that we anticipate good movements this next um, week we're getting into. Now, what I've advised everyone to do now is to pick just one pair. Pick one pair that you know you like. Well, maybe not necessarily a pair that you like. What I did today was to go into the market, to go into the internet and did a little bit of research on some of the pairs just to understand how they move, to understand the psychology behind it. Looking at things like spread, things like volume, things like volatility, just to be able to know when to, let me say, convince myself that it's the kind of pair I want to trade, because to be able to succeed in to profit from one pair, you need to put all of these things into consideration. If it has a very high spread, it's going to be too difficult for you to profit from it. Because say for instance, if you guys can see my screen now, look at this pair and this AUD NZD, that's the 5.1 spread. It's spread. That's too high. This is I think this is GFX. The 5.1 spread is quite high for you to. If you want to profit from this, you need to stay in the market a bit longer, and you're giving already, if you need 10 pips out of it, you're already giving the brokers 5 pips out of what so, but it feels like, let's say, USD shares, you see that one is already is 1.3, USD, USD JPY, and I didn't even know USD JPY was harder than Euro USD, but those ones are really cheap, 1.1 pair. Spread, sorry. So you want to look at that. You also want to look at the volatility. What's the speed? Are they slow pairs? Are they pairs that are commonly traded? Because remember how it is. If it's a commonly traded pair, it means that you're going to expect to see good movements and high liquidity from them as well. So for me, what I've decided to do now is to trade just Euro USD. I think Adrian suggested AUD JPY for me. So I'm going to be taking Euro USD and AUD JPY. But I suggest, or can I say, advise everyone to pick just one pair. Because I'm the one teaching you guys, I have to know all of the pairs. I have a responsibility, duty to understand everything. But I may not be trading everything, but bear in mind, I would have to know everything. So whatever pair you pick is fine with me. Just chat it. If you want me to chat it with you, just let me know. I will chat it with you. I'll give you my own analysis, my own bias about that pair. But I would only be trading only 2 pairs. Maybe I may also try to demo some of the pairs that you guys are trading as well. So I advise pick one pair, because what that does is this: it helps you to understand how it works, how the pair moves. It's just like I'm doing back testing. So this time around, you don't really need to spend time doing back testing. You're there with the pair, you're starting with it, you're finishing with it. So you could do that for the next few weeks. Probably you could do that for 2 months, only trading that pair, and then see how it goes. Remember what I say, it's a lifelong investment. There is no rush. You're not running anywhere. Imagine yourself, okay, just look at this as you being in a university. If some of us that have, the school that I went to, I had to spend 3 years. For instance, I spent 2 years again. So some of the schools, some of us spend 4 years or 5 years. If you're doing the medical course, maybe like for studying for a PhD, that's 10 years, So some people have it for 4 years. So you understand, to be able to attain mastery in a particular field of study, you need to spend time. So you don't want to go in and just jump in, because at the end of the day, you won't have good ground, you won't have good knowledge of that field of study that you embarked upon. So take this as the same thing. Also bear in mind, you're using real money, so you don't want to throw your money away. Spend time studying the market, understand what you're throwing your money into before you throw it in. Don't take my word for it. I'm still a student myself. Don't take my word for it. Look at the charts yourself. Look on the internet. Look on Google. Look on IML. Some of us are still IML. do some research, do some homework, some groundwork by yourself to understand what you're doing. Don't just take signals. Signals don't help anybody. It won't help you in the long run. Even my friend J Rock, he doesn't win all of the time. So that's what I'm saying, that if it's possible, just spend the next few months working with one pair, getting used to that the way it moves. Just see what it does in the market, see what it did in the past. So you just have an understanding of how it moves. That way, I assure you, people that have done it before, they are truly successful. They are truly profitable doing only one pair. They are truly profitable. My mentor told me that just a few days back, that if I want to be very profitable, successful in this industry, I need to start learning to be focused, which is what it is. Because a lot of times, this is what happens. I would put all of my charts all over the place. But when the moves happen, I will miss them. I know some of us also have that experience. So, but if you're focused, if you have only one or two pairs, you know what you're looking at. Even if you don't trade for a whole day, it's fine. As long as you're waiting and expecting that move to happen, so that when it happens, you won't miss it. If you have like 5, 6 pairs on your MT4, when one of them happens, you could miss 2, because at the end of the day, you could end up finding out you might even miss everything.
Should have been options. Sorry. Now, so pick up a pair. Pick up maybe if you want to do Euro USD, it's there. Euro Chef, AUD USD is there. Study it. If you need help from me, just let me know. I will look at it for you. And if you're still here, you still want to pick 5 pairs at the same time, it's entirely up to you. It's just a suggestion, So, but if you still want to do 5 pairs, 3 pairs is still good. It's still up to you. But just know that it would you would divide your attention between those two or 3 pairs. So if you pick one, you're more focused. You're more focused. So what I'm looking for. So now, if I don't want to waste your time, just go straight to today. I'm going to start off with let me start out with Euro USD. Euro USD has been, well, I must say it's been ranging for some time. Let me see, where do I have too many of these things open? I'm gonna use this guy. So you know how we chart? We start all the way from the weekly chart. So we start here. What are we looking for when we're coming? We just want to understand the overall movement of the market. Understand the overall movement, number one, and then also find out where the zones are, because these zones are places where we take profit from, where we enter the market at, where we put our stop losses at. So one more thing I forgot to mention. Now we have to be more disciplined about using stop losses. Now, what does that do? That helps us not to watch the market, be in the market throughout the day. It also helps us to trust our analysis. So if you look at a pair and you've put your trade in, put your stop loss in as well. I know when we started out telling us that I have my own stop loss. I don't use stop loss, but I want to start taking off that. It's a bad habit. It's a bad habit as far as trading is concerned. So I want to start using stop losses, because even the professional traders, they use stop losses. We'll talk about having different streams of income. So you don't want to spend all of your day doing just one thing. You can spend your time doing Forex, and if this is all you do, you can also spend part of your time studying. So you're studying and you're also trading. So the time you don't have, instead of sitting down watching the chart, you could spend it studying, sharpening your skill, just making sure that you know what you're doing, So that's what I want to start doing, start learning how to use stop losses. I'm not very good at using it. I don't like using it, but I have to start learning how to use it, Okay, so to begin with, let's look at Euro USD. Now, if you look at it, we already see zone around here. And you know how I start. So I tend to also use my line charts. Line charts will take away all of the wicks and allow you to just see where the bodies get to. Wicks are important as well. I'm not saying not to consider wicks, but without the wicks, you can tend to see where it reduces the noise, as also help you to take profit early enough, because sometimes some price may not get to where the wick got to before. It may just turn where the previous body got to, so that's another thing to bear in mind. So if I was to look at this, I'll probably just place this around here, probably around here, and maybe around here too. And if you're looking at the higher time frames, there's a large number of pips, so you shouldn't be worried about having too many lines. Like if I draw this now here, you see how many pips this is. See, that's 118 pips. So it's not too bad. So it means if you go to the 1 hour time frame right now, you see it would be. So look, if I can see it, okay, it's because it's okay, I may not be able to see. It's really, really wide. So, but that's fine. Let me just take that back. So that's 118 pips. So it's not too. There's no crime if you have to have too many lines on your higher time frame. So I do that. I pick this. I put somewhere around here. You can already see that this is a range. Euro USD has been here. So we broke out of that range, went up. So we'll follow it. I can do this because I know that this was a major area, came down, touched that before bouncing. So if I go back into the past, I will see that price has some form of reaction around that area as well. See, so you may not have anything around here which offers good offers good opportunity for trading. So I go forward again and look for more positions. Look at this. You can see that coming, hit here, move, came back, hit it, move, then came here, hit it, and then moved. So that's valid zone. And mind you, when we look at it, we don't necessarily need to have up to 5 touches. At least we get at least 2 touches. It's a good place to begin. So I may look at this as a touch, or I could just bring it down here because this is the closest point to the market at this point. If it wants to come back, or I could even do, okay, let me start from here. Let me use here first. Then I'll bring this next one up here. Could bring this. Why? Because I know that I find one. There's one here. There's one here. There's one here. So now, before I continue, one other thing that I tend to do is also draw them as a zone, not necessarily as a line. So I could do this. Bring my rectangular tool. I see you. Some of you noticed me do this in my charts. I do that. The reason why I do that is so that I look at it in terms of a zone. So if price were to come down, I wouldn't necessarily need to wait for it to hit this line, the 1.404783, before I take profit. I could take profit immediately it touches the zone, because price could just be in that area, could reverse in that area and jump up before. It could touch the area before jumping up, may not come down to the line itself. So that's why we draw it as a zone, as opposed to look at it as a zone, as opposed to just looking at it as a line only. Sometimes it gets to the line, but not all of the time. Okay, I forgot to mention that my computer is sometimes crazy. My mouse, so one other thing I can do is let me just drag that down. Hopefully it doesn't give me a headache. Okay, that's good. So another one is here. So you would appreciate the fact that charting is not an easy task. It's not very, you need to know what you're doing, and it takes time as well. Okay. bring that down. So yep, I'm fine with that. Bring this up as well. Fine with that. Yeah. Yeah, on every time frame, but when you move down, let me not say let me just, when you move down to the time frame, to the lower time frames, you would see them clearly. So whatever time frame you find yourself, you could do it on the higher. If you prefer to only do it in the lower time frames, the only reason why we do it on the high is just to see the zones, just to see where the zones are, so that when we dive down, sometimes what you can even do, you could use different colors, use different colors to, if possible, you can even name them weekly resistance, weekly support, and all of that, so just to give you a guide on where you are and where you're going to. Yep. So if I want to do this now, if I wasn't teaching, what I could do is to just draw them in terms with different colors, just to have an idea, just to give me a guide that, okay, this is where I am. It's broken the weekly support, it's broken the weekly resistance, it's at the weekly resistance. This is what I expect to happen, All right. So now let me bring this. Let me bring this. Just do two more before I jump down to the lower time frames. I could do that. Now another thing is this. Bear in mind, I don't want us to always be looking at saying maybe we want to take 200, 300 pips at the same time. You can compound it. You can take it one 50, 60 pips, at the time. You don't need to wait till the whole 200 comes into your account, like things like this. So that's the reason why I'm saying so, is that you could make different, you could make zones so close to themselves. Like for instance, if I draw this from here to here, this is 60. That's absolutely fine. I could take another zone from there, because why is that important? Because price got there and turned. I could take another zone from here for 40. Everything put together is 100 plus. So there's no crime if I put a zone around here. It might seem like I'm having too many lines, but the truth is this: price actually turned at this area, at this point, zones. So I wouldn't just ignore them. They're important to price. That's why it turned at those zones. See what I mean? So because you see what it did, it got here, and what did it do? It bounced and started moving. So what it could do now, it could just keep coming down. That's one thing it could do, or it could just probably it's trying to do a pullback to break this, So once it breaks that tells me something else. I have to wait for it to do like a little pullback too. Then I'll trade it to the next zone. So because it touched here and had a reaction, it touched there, had a reaction, got here, had a reaction, I have to identify, because that's where it is at this point. And if you look at it, okay, let's look at it from the using the main candle. It got there and reacted. So it was going, but then when it got here, it reacted. So I have to identify that area as an important area as well. Though it may seem as if I have too many lines, but it's fine. So far the lines tell a story. So right now, I see that I can draw around here as well. Oh, come on. I knew that was going to happen. And then the last one will be around here. Maybe not the last one. I'm still looking at these areas as well. Let's see what is up here. Yeah, somewhere around here. And then maybe here. Okay. So what am I seeing now? I can easily tell where price is headed, you know, where are the possible places price can get to. Right now, I know that it turned at this point. So what I'm expecting price to do now is to come down to this, oh, sorry, my computer forgot it does this. Come down to this zone. Yep, it could come down to that zone, or either do that, come down to that zone and jump back up, break this and go back up, or just come here and then keep coming down, then leave itself in that range. Could just keep doing that. That is a possible reaction to what price would do. Because if you notice, it did that here, came here, so it fell, but jumped back in, and then when it came back, it dropped here. It didn't fall to the side, fall below this line. It returned, so it could just do the same thing. I would always follow price, what price's reaction at the point in time. So if this is where it got to the previous move, I'm betting it may come back to this zone before making any other reaction. It may come here before breaking down. If this is a place it got to before having a turn, it means that when it's going back there, it's going to come here first before going up. Although if you look left, it got here, but after getting here, the next place it got to was here. So I would be more concerned about here than here, or here, or here. So where price is at that point in time, or got to previously, is where I would be expecting it to get to. So I won't want to put my TP at this place, this next zone. No, my TP will be here. Why? Because this is where price got to. Do you understand what I mean? So always do it based on where price got to previously before you do it to the next zone after that. Because if I take profit here, it's fine, even though it didn't do a pullback before coming down. It's absolutely fine. But most importantly, it didn't turn before I got my profit. So I take my profit here for how many pips? Let me see. Maybe I go here, take my profit for 72 pips. That's not bad, So because from there, it got here. It got here for how many pips? Only 25 pips. Because I could have entered and waited, said, okay, let me enter, because price got here, let me enter and get 101 pip, okay, 100 pips. But what could have happened? It got there, price got here and then turned. Then I'm stuck. Yep. So first of all, I have to make sure that when the price gets here, I either secure the bag or move my stop loss into profit and watch what it does. If it breaks below, all the best for me. If it doesn't, I'm still safe. So that's one thing price could do. Another thing it could do, it could just break out of this. Yep. And do a pullback. And then I'm riding it to the top. It's easier for me to take profit in these smaller zones because this is not you see the way it moves. It's not moving very, very well. It's not moving with a lot of like this kind of movement. This was really good. This was really, really good. I know that my next zone will probably be somewhere around here, but look at what it's been doing here. It's just been choppy. Just little movements, then turn, little movements and turn. So I wouldn't really want to put my target wide. I have to make my target to exist within the confinement of that movement. That is this movement, just this, So if you can see, you can really call this a range. So price is really, really ranging at this point. That's what I would say. It's not really making some really remarkable moves that I'll be, really looking out for. In fact, I won't really trade this pair for now until when it starts moving properly. So yeah, if you want to trade this, so just look for price to keep doing that, or it may do that or just break below, get to this point. But then what I'm really waiting for, because it's been in this range since when? Let's go here since 2000 January. It's got here since January. It's not been able to break out of it. See it here. been going up and down, up and down, up and down, up and down. So I'll wait. If it breaks out of this zone, it did here, that's the false breakout. If it breaks out, then I know that my next zone would be here, this area. This would be, and it would be a very, very good trade. If it happens to break down, it's going to probably come as low as that. But don't forget this zone. Don't forget this zone. Very key as well. Why? Because price got there. So it's definitely probably going to get there. But if it breaks there, I'm taking profit here. Yep. So that may happen, or it could just break out and then keep moving up as well. Same thing it did here, goes up and then falls back before jumping. Pure price action. We know what it is. Price breaks a zone. What it needs to do, it needs to come back and retest it, or do a pullback before jumping to the next zone. So that's what really market structure price action is all about. That's the movement of price from zone to zone, break, retest, zone, next zone, break, retest, next zone. So have that mentality anytime you're drawing a zone. Break, retest, next, or even entering it. Break, retest, next zone. Break, retest, next zone. All right. So that said, that is what I'm looking at for Euro USD. So I don't know if anyone has question for Euro USD. Okay, I forgot something else that I identified on my other chart. So that's at the 4-hour chart. Yeah, another thing is this. I kind of drew a trend line around it too. I think, yeah, drew a trend line. Was it from there? Yeah, I think the trend line was from here. So that's kind of that's given some kind of confluence, if you will. Yeah. you are at MVP. You're fast becoming a mini mic. So yeah, I had that. So that's also another extra confirmation, extra guide for you. So just watch out for those trend lines. Once it breaks it, know that, okay. But if it does, the good thing about trend lines, what it does is that it just boxes price in. It puts it into a box. So you know that when it breaks out of the box, it's definitely moving to the next zone. Right now, if it breaks out of this box, if it breaks out of this box, that's this triangle that you're looking at. Because this is a triangle. Yep. It breaks out of this, you know that. Yep. So that triangle. Yeah. I don't know how to draw a confluence. Yeah. Confluence. Let me explain what confluence really means. Confluence means when 2 or 3 of your strategies align. It's nothing at all. When you draw, maybe like you draw your Fibonacci, you're drawing your trend lines, and you're drawing support and resistance. You're drawing all the 3 of those strategies. I mean, yeah, putting all of 3 of those strategies on your chart. When they align, that tells you something. Like now, if you look at this, if this comes here, it touches here. Okay, I can say, let me just bring, if I bring this up here a little bit. So this is the trend line, and if you notice it's in the same zone as a support and resistance. Yep. So if you notice what happened, it got there, it fell back. The same thing when it got here, what did you see? It fell back. So I would be more concerned. I would watch it closely. I know that if it keeps doing this, it keeps coming to that zone. I know there's an important zone for price in terms of support and resistance. There's an important zone for price in terms of respecting the trend line. I was always trade if I want to do counter trend trading, I would always probably take a sell. When it gets here, I know that I'm probably going to do a sell. If it got here, I know I'm going to do a sell. If it got here, I know I'm going to do a sell. If it got here, I'm going to do a sell. Either put a sell here, put my stop loss just a bit above there. If it got here, do a sell, put my stop loss above there. It gets here, do a sell. It just gives you places for you to put in your positions. Because it's like a how can I call it? It's like, yeah, it's like, what is confluence? Confluence, yeah. It's like it's confluence. I don't know another word for confluence I can use. Maybe I could just check the dictionary real quick.
Could you say it's where two two
Yeah,
same parallel line meet or something?
not necessarily parallel lines. Let me see. Well, a junction. A
Yeah,
margin
a
of
junction. A
hair.
junction. Yeah.
Yeah, not necessarily two parallel lines. Could be two, three different tools. You could just
From
draw a
different
Fibonacci.
directions.
Yeah, your Fibonacci aligns with
Okay.
your support and resistance, or your Fibonacci aligns with your trend lines. So it just gives you extra confirmation that, okay, that's an important point. That's an important zone that price would definitely have a reaction. Like I would put a trade here for a sell, you know. Yes, multiple confirmation. That's a good word to use, a good phrase. I'll put a sell here, then I'll do my stop loss just above because I know that this is an important zone. Price always got there and turned back. I'll put because I've identified it on the higher time frame. It makes gives it even more meaning. So it may retrace when it gets here. It may retrace when it gets here. It may hit and bounce, or pull back when it gets there. I could keep putting my sell orders in there. But once I see that it breaks out, I know that okay, it's going to the next zone. You know, so you could draw multiple trend lines depending on where price is at. So confidence is just the extra confirmation on your charts. It just puts different strategies together just to show you points where price would have reaction. You know, like this one has a reaction for support and resistance and the trend line. It's really, really easy. So you can add that to your arsenal because as a naked trader, you need to also work with confidence as well to give you that extra confirmation. Yep. So that's that about that. It's not a very fantastic trade but watch it because it's really getting close to it. It retested here, it broke out, tested 1, tested 2, tested 3, tested 4. So it's pretty much getting very close to where the triangle, the tip of the triangle is. So we can either expect that to break out or to break out below or break out above, like what Euro USD did a couple of days back. We boxed that into a triangle as well. See what it was able to break out to the low side of the triangle. So yeah, price would always do that, and your box would always help you to identify that early enough. So Euro USD, let me look at Euro JPY. Let me look at Euro JPY. Where are you? Okay, so okay, so same process, nothing changes, same thing. Go there. What is happening? Real simple. Identify the zones. I always forget my line chart. So this is where price is at. This point in time, this is where price is at. So I'm going to identify that. Let me use this. Let me use it because it hasn't gotten here yet. Here. Yeah, because of this and this. Let me see where else. I know. Yeah, okay, see, somewhere around here, so it's fine. I can do that. There's no much data on this side to tell us much. So, but I know that when we go back in time, we will see a lot more data than what we are seeing at the moment. So again, don't be concerned about too many lines. You're on the higher time frame. When you drill it down to the lower time frame, the lines will disappear anyway. Or if you can look at it to see how many pips they are, you know that they are not that like look at this. Let's see how many pips this is. Yep, that's 72. That's good. That's not bad. Not so bad. Yep, and last one there. But I want to identify because now price is heading down, so I'm more concerned about not the upper part. This is where price is coming, so I feel it might jump down even more. So I'm just going to be more concerned about the top than the bottom. Yep. Okay, so that's fine. Yeah, so I can bring it down to the daily and see what's happening there. And again, don't be afraid to move your lines. Even if you identify them on the higher time frame, don't be afraid to move them like this. There's no crime if I move this here. You know, so there's no crime because when you come down, you tend to see things a bit clearly, more clearly. So I could do that or leave it and go to the 4-hour time frame to see it, even because we don't really trade the daily. We trade more the 4-hour and the okay. Wait, let me use the candle. Okay, so I could leave things like that. Draw my zone now. That there. Oh, sorry. I have this issue with my computer. My mouse, sorry. Okay, that's where I'm at the moment. So what this says is telling me that price, if you notice what happened here, you see sweet structure. I'll tell you sweet structure. See what happened. Price came here, bounced, couldn't even come back down until it did. It came here when last time it got here was March 5th. You know, it couldn't break through. It went up and then finally came back there. How many days later? Was that March 3? Sorry, March 5th. Yeah, March 5th. Then it came here March 19, you know, after 2 weeks. Yep. So what did you see it do? It bounced again, and then finally, what did it do? It broke it. And when it broke it, what did you see it do? Retested. I will have jumped in at this point. Would have jumped in. When it came here, I would have jumped. Well, look at what happened. Now, that's why you identify your zones. Now, I could well just identify this as a zone for myself. Why am I identifying this as a zone? Because that could be a potential stop loss area for me. So apart from target areas, your zones also help you to identify potential stop loss areas as well. So that is my zone. So if I wanted to take this trade, wait for that, broke. I don't drop, although I know, yeah, it broke and got here straight up. Because if I go to the lower time frame, I may even see some pullbacks. But it's fine because I don't trade on the 15 minutes and all of that. I trade on the 4-hour chart. So I just wait. If you look at the 1 hour, let's see what it did here. There. Okay, you see what it did? Broke, it retested. That's have a little bit more noise, but it's fine. You go back up. So it broke that, came back and did the retest. So I enter my trade at this point. I put my stop loss here at this previous zone. Yep, I put my stop loss at this previous zone. Then I trade it down to the next zone. Trade it down to my next zone. Now, another thing, because I know that it broke, it hit here, there's a tendency that it might actually come back down. But let me look at it on the, let me look at more data. Let me see what's happening. Okay, so this low, it's not done this low since since 2007, August 2007. So it's not gotten this far. It broke the last place it got to. Okay, this is the last place it got to, which was so it's March 4th. It broke March 4th, and it came to where it got to here. It's touching this place. So what I'm expecting it to do, because it broke this, so it's probably going to come down to this zone. You know, it's probably going to come down to this zone. So, and if it breaks this zone again, what am I looking for? When I say break, what am I really looking for a break? I need to see a break, a total break. Look at this, just 2 weeks. These weeks are not helping me. You know, it doesn't tell me anything. What I want to see is something like this. And more importantly, a bearish engulfing candle breaking this zone. Before I can really say this is a valid trade. Yes, it broke the zone, but then did it close below it is the question I want to ask. Did it close below it? You know, what kind of candle broke it? Is it just a small candle, or is it a bearish engulfing large candle that broke it? Those are the questions I want to also look at. You know, so look at this. If it breaks and closes, this didn't close below. You know, so if it breaks and closes below, I have to wait as well Probably wait for a retest. Some of us that do the retest, yeah, I know sometime I don't even trade the retest. I enter on the break. So, but what the best way you can trade this is to wait for that retest to happen, for it to come back and retest that zone. And then this is a massively sweet zone. I mean, sweet trade. If you want to, you know, where am I? Okay, I think I'm on the weekly time frame. That would be too much to wait. So let's take this out. But look at what I'm trying to say. It's still the same, whether you're on the 1 hour or you're on the 4 hour. Always wait for that retest to happen. You know, so if we enter this trade, this is going to be a very sweet trade because of that long gap here. So there's no area to be concerned about. But let's just bring it down, bring it back home. So yep, so that's going to happen. That's a retest, and then bring it down to the next zone, and then which will be my next zone. If it breaks that, this is where we're going to. But if that doesn't happen, we know what's going to happen. It's going to touch that again, and then go back. The next place it's going to get to is where it got to before. And then if it breaks that, what we're looking for is a retest to that zone. Excuse me. So as much as you're doing this, also you're doing price structure, market action, price action, market structure, price action, all of that. One other thing you also have to also be looking out for are patterns. You know, you want to look at the patterns, double bottoms, the cup on the handle. I think, what did I call it again? I think there's a new name Didi and I gave it. Same cup of chocolate or something. So you want to look out for that price pattern. You also want to look out for triple top to start like really good trading patterns, head and shoulders. So as they are happening, you're also using market structure, but also putting these patterns into consideration. Now, this is a sweet one. I'd expect this to drop to this point, and then from there it can bounce. You know, but if it doesn't bounce, it needs to break. Cup of hot chocolate cocoa, nice one. So you know the cup of hot cocoa, you know that one. That's the one we used to call cup and handle. That's the one we want to start using now. Yep. So it needs to break. If it comes down to this point, we can take profit here and wait. Either we'll wait for it to break, make sure we move our stop loss into profit, wait for it to break this, and then we can retest, and then we can take it to the next zone. Or we see what it's going to do. It may come back up and probably hit our stop loss and take us out of the trade in profit. But we wait then and see what's going to do, because before it gets to this next zone, it's going to hit this zone and retest. Hit it, break it, and retest if it's going to break it, or probably just keeps consolidating. We know what price does. We know price action. You know, it needs to hit the zone, hit it, break it, retest, then move up. Or if it's coming down to support, it's going to break it, retest, then keep going down. So that's what we understand in the market. So we don't need to really be worried or asking ourselves, where's price going to, where's price going to. We know where it might get to if it breaks a zone or enters a zone. So if that happens, the next thing we know, next zone we know it's going to is up here. Yeah. It's actually the best strategy ever. Retest. If you can see, that's why trading one pair helps you, because you're there with the pair. You can't miss it, you know. Or another thing you can even do, you can set I think that app is called Call Levels, you know. So if you see it break, yep, so you can set timer on your call level for when price comes back to that zone. So that will alert you, then you can go in and put in your trade. There's an app called Call Level that does that for you. You know, so if you trade one pair, you won't miss the moves. When the app happen, you already know what's going on. So we expect that to do that. Yep. Okay, so just check it on your app store if you're using iPhone, or just check your Play Store if you're using Android, and then you see it's called Call Levels. It's really good. It helps you to set and one other thing you can do, check YouTube or Facebook so that you can get how it works, you know, for better understanding. So that's what we're waiting for this move to do. Break here, come down, or return back to where it's coming from, or keep going up. Whichever way, whatever it does, call level, whatever it does, we'll be prepared for it. That's Euro JPY. The next one I have here is GBP USD. GBP USD, that's also been moving like the Euro USD. So let's see, GBP USD. This was a massive win for some of you that took it. It's a massive win. Let me get this out of the way. Okay, so now again, same principle. I have to do this over and over again so that we can all get used to the steps that we take when trading this. So you see where we're at. Price is I would say this price is this is a pullback. I would say I will call this. It's a pullback because you see that it's in a downtrend. You know, so see that move, see that uptrend, then that reversal, head and shoulder. Remember, head and shoulders are reversal patterns. Head and shoulder that we see here, and then what's happening? Price drops massively. I think this was the Brexit period. Was it not? Oh, this wasn't. Okay, this was. I think this was actually the recession period. I think that was the recession period because price dropped how many pips? Massive drop. My God. 7,000 plus. Wow. So price is in a downtrend. So that's that move. Consolidation, drop again, and then it's doing that again. So expecting price to keep going down. But that's not our business anyway. We are not trading the monthly charts. So right now what we do, same principle. So look at what's happening. You can see that it may actually be forming a flag. You know, it may actually be forming a flag. You know, that move. So that's something else for you to put into consideration. So when you see a flag like that, so 80% of the time we expect price to do that. You know, but we're not gonna trade flag. We'll use the trend line as well as we trade, but we're more concerned about what it's doing at the point in time. So this is where price is at. Yep. So identify the zones first of all. Line charts. Do that. This is like really sweet because it's so clear. Do that. Do that. Do that. Do that. It's not too close together. Let's see. That's 115 pips, so it's not too close together. That you can see how everything aligns. This is a really good good movement. So it's just doing higher highs and higher lows. So which is good, is a good trading pair for us if we want to trade this. I'm gonna take this one. I think I'm gonna take this one too. I'm gonna take this one as well. And the next one be this one. It's like a double bottom, isn't it? Looks like a double bottom forming. Has a W. So that means there's a tendency for this to keep climbing. If we formed that double, let me look at it on the lower time frame. Okay, what's it called? Is negated, but notwithstanding whatever it does, we're going to follow it. So that's that one. I bring it down to see what other levels are there, because since it's going up, I would believe that it may keep going like that. So let's see what levels we'll take our profits at. So this is where your money is going to come from. So we see that it's going up, so it may just continue going up, you know. So but even if it doesn't keep going up, we know that if it comes down, we won't miss any trade, because it's really clear. It's already told us the story of its movement, of how it's gonna move throughout this ordeal, this long whatever it's happening to the pound. So it's doing this, going up, doing that, you know. So it means if it's coming down, it's just gonna follow the same route. Is it route? Routes they call it, or routes. I know the US people call it routes. No, routes. The UK people call it route. So it's gonna follow the same route. So come down, come here, then after that come here. You know, just keep following that same direction. So it's good for us. This may be forming a double bottom like that. If this is a true double bottom, means that it's definitely going to keep going up, you know. But we won't just anticipate the move, we'll just follow what it does. So that's on the weekly. I bring it down to the daily. Let's see if we'll have some form of, right now we can see that price is price did some form of it's some form of consolidation where it is at, you know, had some, but before then, I think I saw a trend. So I'm going to draw that trend out. You see that? Trying to switch now. Yep. You see that trend? So that's a really good one. Yep. That move, and then it formed that trend. So when it broke out of the trend, if you go to the lower time frame, you see a retest. Yep, just like I thought. So it broke out of that trend. What did you see it do? Came back and retested it. I can adjust this, there's no crime, to just capture that move. What did you see? It came back and retested it. And mind you, look at that for Confluence. Look at what happened. A key support zone. Yep, it came there, bounced. Another key support zone. What did you see it do? It came there. What did it do? It bounced. Yep. So now that I'm on the lower time frame, I can see more zones. You see that? It touch here. So market structure, it never fails. I see that happening. Yep. So bounce, then somehow, because of the strength, it broke out of that trend. And what did it do? Came back and retested. I wish I saw this. I would have entered. I don't know. I think we even caught this move. I can't remember. I'm not sure. I can't remember what happened. I think we caught this move. So it bounced there and we entered that move. And it's been going up ever since. It's already gone up 300 plus, you know. So what we're waiting for right now is for price to keep doing the same thing. I can identify more zone, you know, look at here. Now, why? Because we're in the lower time frame, and it's necessary for us to identify zones on the lower time frame as well. Why? Because those are the places that price is going to get to. We don't trade the daily charts, you know. We do the H4. So right now, if price leaves this place, where is it getting to? This one. So that's where we have to be looking at price. You know, price next movement. That's where we'll have to be looking at price next movement. So that is happening right now. We can see price has broken that. It's acting like it's retesting. Let me see. Okay, see what happened. You know, formed like a double bottom here. And a double bottom broke out of the neck. Like it's coming back to retest the net. So what are we expecting to happen here? Your guess is as good as mine. So we're expecting that move to happen. It's to climb to that next zone. So we'll come back to my 4-hour chart. Then when that happens, if it for some reason breaks, don't move that. If a paraventure moves, breaks this, I'm waiting for another pullback or another retest to that zone so I can take it to this next zone. That's what I'm waiting for. But if this was a fake out, it's all good. It's going to do that, but it's going to come back in. If it comes back in, not a problem. I'm going to wait for it to do a pullback also to this zone, and then I'll take my trade to bring me back to this next zone. For how many pips? May not be too bad. Let me see. Not bad. 73 pips, 72 pips, not so bad. So if that happens and it breaks that as well, it's coming to this next one. Yeah, if it breaks that, don't just jump to this next one. Don't forget there's something here on the lower time frame, so more zones will be formed. So just identify them, because that's what we trade. We don't really trade. So if it's a fake out, and let me read that again. So the question says, so if it's a fake out and I'm already in for buy, I would lose money, right? So that's the reason why I need to wait. Yeah. So if this was a fake out, let me see that. Let me see that again. So if this move was a fake out and you were already in, this would have what would happen is this, because sometimes we won't win all of the trade. What will happen if you had not moved your stop loss to profit? What will happen is that this is going to come back to your entry, and then if your stop loss was somewhere around here, you would lose this trade. Yeah, because that's just the downside. That's the downside of entering the market too early. Because if you had waited for, where is it now? If you had waited for a pullback to happen, or what's it called? A retest, you entered it, you won't really lose. You will lose money, but not as much as you entering before the move. This pullback happened. So that's why I have to wait to ensure that it's a valid move. Let me come to the 1 hour chart. So it comes back to retest. So you enter the trade, it's going to drag you down if it's a false move. So but then, well, you don't really always know what the market is going to do. But if it's a good trade, then it would have been a perfect move to just wait for that to happen. But if you entered on this move right here, then it means if it got here, you would have moved your stop loss into profit at this point to wait to see what it's going to do. So if it comes back, it's going to kick you out of the market, but you will still be in profit. So there are two ways. The downside to the upside to, or the advantage of entering the market early when you see that breakout is that if it happens to do a pullback, you're going to be able to take some form of profit out of the market before it comes back to that level. But the downside the downside to waiting for that retest is if it happens and the retest is not a valid retest, it was going to be a fake out, you will lose money. So, but we don't always know what's going to happen. So most times to start out our first trade, when we see that retest, we start out with a 0.01 lot size until we can confirm that that is a valid retest and it's going our direction. So first of all, put a 0.01 lot size in that trade and wait. Even though if it comes in and it comes below, it doesn't go your way, you probably will come out with maybe $5 loss or something. So if it goes your direction, so you wait for that next move, that next either next pullback, or you can enter again. Can enter again immediately and then ride it to the top or to the next zone. So it's called testing the waters. So on the H4, so this is what we're expecting to happen. But if this continues to go up, we're in for a very, very good ride, because the next place we saw price have a reaction, the weekly, is here. It got to this point. So this is where we're at the moment. Let me see if it goes from here up. How many pips are we looking at from here? Where it is now, this is where it is at this point in time. We're looking for 210 pips, and if it breaks here, we still have a long way to go. This is it. This is that move. Yep. So that's that one. Any question on this one, GU? Yep. Any question? You can see the way it's been going up and going up. When it got here, it kind of slowed down a bit. So the next one we want to look at, the next and final one, I guess, is our trade, USD JPY. So let's launch that. Let me delete. Okay, I think everything is fine here. USD JPY. We saw this move when it started. So again, higher time frame, identify the zones. Oh, I always forget this line chart. So we do that. I'm going to do that into that one. Let me do this one first. First one first, and I'll do this next one. Yeah, this is where we're at. Then I'll do this one. Leave it there. Then which one? You see what I'm trying to do? I'm just trying to identify where price touched. So it could be 2, could be 3, you know, doesn't really matter. But as long as price got there, it means it's going to have a reaction next time it gets there. It wants to come there. So do that. I know some people say you should do the, the more places it touches. Yeah, because, well, it's price. Sometimes that works, but it really doesn't matter. If price got there before, it's probably going to get there again. So I'll do that. Let me let it coincide with this next one. This one. That one, because of that move. Okay, I'm going to leave the upside for now because as you can see, right now, price is really acting like it's going down. So let me just work with what we have here on the downside. So, yep. Daily chart. You know, first of all, I know we drew that trend line. Have this going on. The guy refused to break that, broke back down. So it's all good. Let me take that out because already that move is already done. Keep the charts nice. So this is where we're at this point in time. You know, so price broke this major zone. Excuse me. Major zone. It broke it. And when it broke it, what did it do? You can see it clearly. It came back and retested it. So let me come back to that chart. Let me draw it so it covers all of that zone. Yeah. So what did you notice? It came back and retested it, broke it, did a lot of work in this area, came back, tried to, and was able to break it. And what did it do? It came back and retested it. You know, and what is it forming now? It's forming lower lows. Yep, it's forming lower lows. So hit that, came back down, came up, and it's been forming lower lows. So what you can do is to draw your trend line to work with price. See what's happening here. See what price is doing. So okay, let me bring that down. So this is where we're at now. What are we expecting price to do? Because it broke that, we're expecting price to go back up or break this. So either it comes back to this trend line. I think I'm going to break. Okay, let me bring this down here so that have some form of confidence. So it may come back from here and hit this next one. Or before that, there's no crime if I draw my line here. Why? Because I can clearly see a movement. You know, I can clearly see this happen. You see that? So yep. So price could do that. Bring this to me. So price could do this. You see what happened? it came here, touched, jumped, came back here, touched, jump, came back, touched, jump, came back to, and the next thing, what did it do again? This was a major zone that it broke. Came back, retested, and it's been dropping. So it's not been able to break this zone until it got here. Came back, broke out of it, and then did a pullback. It didn't really come back to retest it, but it did do a pullback, which is what we always say. When it breaks a zone, it could do a pullback, or it could just come back and retest. Let me look at it on the lower time frame. So you can clearly see the pullback happen. So you see that it broke out of it and then did a pullback, and then it's heading down. Now, I won't be surprised if price, look at this, because you can see something like a double bottom happening here. In fact, it's triple bottom because it's 1, 2, 3. You know, so what can happen is price going back to this zone, going back up here. Yep, so that's one thing that can happen if you, let me bring that down. So you could do that before coming back down. Yep, price could do that because yeah, it has this triple, but that's a good indication that price would go up. So what I'll be looking at for first of all will be a triple bottom before it break and close. Yeah, but then I won't jump in until I have a good confirmation. So what I can do is just draw that line around here. This would be my stop loss. If I'm going to put a stop loss, this would be my stop loss. My stop loss would be around here, where this one's probably give it a little wiggle room so it doesn't hit it, just in case. Because the notice it's been weak in here. So that's wicks are all signs of rejection, you know. So it rejecting these zones, rejecting it. So what I'm expecting this to do is to climb back to that next zone, you know. Our head and shoulder, sorry, our double bottom. We know that this is what it is. We have to measure from here to here, you know. Measure from here to here, then pick the shoulder line. So this can be our shoulder. Can be our shoulder. Or you can even pick it. But that's not the problem. It doesn't matter where we pick it from. We may take profit before we get to the final target. So if you can see what's happening, it aligns well with that zone. Yep. So AB would equal to CD. So this would be our take profits. Let me see how many pips that is. Maybe about 50 or thereabout. Yeah, about 45. Not bad, you know. So that's where we're at on this issue, on this USD JPY. So it broke that. So because it hasn't actually really come to retest, it just did a pullback. So that may be that retest that we're waiting for. So forming a double bottom, completing that double bottom could actually be that retest that we're waiting for on the H4 to happen. So when that happens, we know that we're going to ride it all the way down to this zone right here. You know, that would be our trade. But then even though it breaks this, remember, we won't just jump in and let it, you know, we have to wait. Either we jump in, then we ride it down, we wait for a pullback before we enter the next position for that next drop. You know, for some of us that will trade the double bottom or the triple bottom, whatever we want to call it here. So trade it, take it to the next zone, and then wait for a good confirmation before you can jump in on a sell. You know, but I don't actually advise counter trend trading. So if it's a what's it called? If it's a trending market, you know, it's in a downtrend, I would just say let it do all of the what's it called, the pullbacks and retests that it wants to do. Just wait for it to come back to that zone. Then you can sell it again and sell it and bring it back down. So forget about this lower time frame because that's just about 40 pips. You know, for if you want to go for it, if it gives you that double bottom thingy, so if you want to get into it, you can get into it and ride it back to the top. Yep. You know, but I would say leave it, let it do whatever it wants to do because it's trying to retest that zone. So it may retest it and then you can ride it down. Now that's one way of looking at it, but if it doesn't retest it, what we're expecting this to do is to just continue down as it's going. So it's going to break this zone, you know, it's going to break that. It's going to go and retest that. And then what is it going to do? Same direction. It's going to come back to that zone. So that is what we're expecting this to do. Excuse me. So that is what we're expecting this to do at this point. So again, we are seeing that move. We're seeing that move. We want to wait for it to complete that retest. How do we know that it might do that retest? Because if we look at the H1, what are we seeing? We're seeing a double bottom forming or a triple bottom, so that's what we're seeing forming. So we know how we trade it. We take it, it comes here for confirmation. If you want to trade this, if you want to just do it, you want to be stubborn, you want to break your rules, what you want to do is, this is your stop loss. This is your stop loss right here. Then you enter for a buy. Then all the way from here, it's a lot of pips too. That's 88 pips to that zone. If you want to be conservative, you don't want to just take a guess. You wait for it to move and come to this zone. Once it comes to this zone, breaks and retest or closes, whichever one you want to do will be your guide. You enter it and ride it to that top. Ride it to that top for 45 pips or thereabout. Then from that zone, you can enter your your sell, and then put your stop loss somewhere around here, which would be your previous high. That will be your stop loss. Some wiggle room. So you start trading. This will not be a stop loss, unfortunately, because you would have said, okay, let me do it at the end of this zone. But no, look at where the previous candle was. That will be your stop loss. Then you can take it from here down to that next zone and wait for it to break out or keep doing the move to the sides, which may be what it might do. Could do some consolidation, some ranging, but you know what to do in the market. Right now, the market is in a downtrend. It's moving down right now. So that is what you want to do. You want to trade it down. Yep. So that brings us to the end of that pair. The ones I wanted to consider. Do you have any question on this at all? Or something you want me to look at? Okay, it is said no. All right, any other person? Any question at all? Or anything you want me to look at?
Sorry, Mike, my hands are busy. I can't type.
Okay.
I just wanted to know, how do you swing your chart to get in to make the screen smaller and get a higher, I don't know how to explain it. My screen gets so full, like in my 1 hour time frame, I can't see higher when I want to see higher. But I see how you swing it, how you reduce it.
Okay, so for me, it's two things. You can go to the higher time frame, to have a global picture of what of the screen of the whole chart. Then another thing you can do is use click on your numbers, prices, and drag it. And click and drag it. So just use that. If you come to your 1 hour time frame, for instance, now you can click and drag it. Because right now, since price is on a downtrend, it's not really going to show you a lot of things. So what you can do is go to your top here and drag it. That way you can see.
Click, right click, or double
no, not right. Left click. Just click. Okay. Click and drag.
Okay, thanks.
If you come down here, you can also make it drag. You can click from the floor here and drag it up. Make it like that to give it a full range,
Okay.
Then you can also click from top here to drag it down to give you the full range as long
Okay, cool.
As long as you want to go, or wherever you want to click it from, it just does the same thing. And then you use your magnifying glass as well. All of these tools just really helps you. Yeah, absolutely, it is cool. Your magnifying glass also helps you to just gives you another view. So just a combination of your glass I call it magnifying glass. Your zoom tools, combination of your zoom tool, you can zoom in and zoom out, and then use that to control your movements as well. And then your higher time frames will also give you a bigger picture of what it is. That's pretty much it. All right. If there's no other question, we're all happy. I would again advise us, pick a pair, some partner, some pair you want to be trading for the next few. In fact, I want to give you as a homework. Pick one pair and let me send the pair to me with your markups of what you see this week to be. So a pair that you want to trade this week, because I'm going to hold you accountable. So that is what we're all going to be trading. Not all. If you pick it, that's what you and I are going to be trading for the next few days that we're getting into. So pick a pair, look at it. This is what you anticipate to happen in the market with that pair. I will look at it with you, and then we can trade it together. Unfortunately, I may not trade it with you on my live account if it's not the pair I trade. But I'll trade it with you in demo. And remember what I said, demo is also a good tool. Don't go on a lot I might. Let me hear. What did you say? Okay, please don't go on me. No. That the good thing about here is that it's a learning platform. It's a learning platform. There's no wrong, there's no right. That's why even if I can ask if it's better, if you guys can, don't use your live account for this next week. Let's just try this strategy on our demo. Try trading only one pair for this next week that we're getting into on our demo. Let's make all of the mistakes that we want to make together. Then from next week, we can start doing more live trading. So pick a pair. Don't worry. It's okay to make a mistake. It's okay to do miss it. It's okay. That's why we're here. We're all here to learn. If you make a mistake and we want to laugh, it's fine. Life is not difficult anyway. So pick it. I will share it with you. I will look at it together with you and give you my own bias as well. And then we can trade it together when we see the move, whether a double bottom, a head and shoulder, or a retest of a zone, whatever you want to call it. And also bear in mind we're still doing the candlestick pattern. I forgot I didn't even mention that. We need to also put that into consideration. We're all learning it together. Look at the move. We see where rejections will occur. This this is a good candle. I think this is a hanging man. This is a good candle that tells us that the next move is going to start coming down. So these are some of the things we also want to look at. So trading price patterns as well. Like if I wanted to trade, this is a doji. This is a very, very good combination, because I would enter this trade here. I will enter my sell here when this candle crosses this low. This is where I will enter my sell. I'll sell I don't have to wait for it to close. I may just sell it. So you sell it and look at what happened. When I see this bearish engulfing, that's a powerful signal for me to even continue holding that position, because look at what happened. It dropped so far. So that's another thing that we have to look at. Candlestick pattern trading. Yep. So yeah, this week I expect to hear from you guys. Let me see your pairs, and then we can call it a week, and then next 2 weeks we'll begin our trading proper. All right, thank you everyone for calling in. Have a fantastic weekend, and I will speak to you guys on Monday again.
Okay, bye guys.
Bye everyone.
Bye. Okay, thanks Mike.
Bye.
All right, thank you.
Bye.